Gold rose as the primary currency metal because it meets all the criteria to be a good currency. You cannot tell me, because there is no other asset that has never gone to zero. Oh, well, that's not really true. Land has never gone to zero either. But it's not movable. So gold has all the attributes, plus it is a way to hold a lot of wealth in a small, movable, invisible, decentralized package. Silver too. And I had a great question the other day about silver and gold. And the only challenge that I really have with silver is that it's bulky. So I own silver. I own enough to maintain my current standard of living and my children's for 10 years. But the lion's share of my wealth is held right here in gold, because that's what they reset the currency against. And history has shown that it outperforms as a store of value. And we've seen it too. But with gold, there is a finite amount, only 166,500 tons. That's it. That's all the gold in the world. And what about the in-ground gold? Because that's part of it. So people say, well, they'll find a whole lot more. Even so, there is a finite amount. And that is a critical key in here. There's only, of total identified reserves, there's only 53,000 tons. So far less than what we've pulled out of the ground. And the Department of the Interior runs a report on in-ground gold every single year. Could they find more? Sure, that's definitely conceivable. But even if they did, it would be a finite amount. And gold is indestructible. So it makes it a perfect accounting tool, because we can account for roughly 98% of all the gold that's ever been mined. Maybe what we can't account for is the gold that's in food that you eat. But it is finite and it is indestructible. It's going to get a lot worse, because where they held the inflation from 2008 were in assets. And I don't know if you remember this or not, but you could certainly do a search on it and it would come up, the reflation trade, where the central bankers vowed to reflate stocks, bonds, and real estate. And they did. That's where all that money printing that they were doing, that's where all of it went, was into the targets that they had set. But again, they don't really know what they're doing. It's a big experiment. And so all the talk is, well, Jerome Powell is trying to engineer a soft landing. If he can't see past this narrow scope that he has, how in the world would you imagine that he would have the ability to land this economy softly? And what about all the people that are suffering? I'm pretty sure that they don't think that this is such a soft landing if they have to decide between putting a gas tank in their car or putting food on the table. People are unfortunately having to choose between necessities. It's not buying this blouse and putting food on the table. It's buying that tank of gas and putting food on the table. Two key necessities. So is the inflation the black swan that breaks the camel's back? I'll let you decide that one for yourself. Second, the return of inflation, while most pronounced in the U.S., is global. Inflation is now over 5% in 58% of advanced economies and over 7% in 55% of emerging economies. And that's the way they calculate inflation. I would venture to guess that inflation in advanced economies is really running, even as an average, somewhere around 18%. And that's why it's so noticeable. In fact, residential real estate, the numbers just came out, and in 20 key cities, the inflation was 19.8% on residential real estate, while everything else is declining. real earned incomes, etc. So we need to take a look at this because they didn't see it coming. And do you really think that they can guide us out of this mess and create a soft landing? Nope. Absolutely, positively not. And I'm thinking that this is the beginning of the hyperinflation. And that's why I'm saying we have run out of time. Get it done. Food, water, energy security, barterability, wealth preservation, community, and shelter. Get it done. If you don't have gold and silver, get it. Physical, in your possession. Oh, it's so inconvenient that I have to hold this. If you don't hold it, you don't own it, regardless of your perception. It means nothing in reality and also in a court of law. Paul Volcker and Alan Greenspan define price stability as wage prices, right? If you don't think that inflation is going to be too hard or go up too much, then you don't ask for a raise. That's all they really care about. They want the prices to go up because that makes GDP look better, right? Look at all this growth. When most of the growth that they report, and they want you to believe that there is based upon inflation. And I had somebody say to me last night, oh, inflation is good. Not for everybody. For some it is. So really, the central bank's anti-inflation credentials and credibility can help hardwire such behavior. So if we believe them, if we have trust in them, then we don't do anything. Then we let them do whatever they want. So think about what backs this garbage, right? The full faith and credit of the U.S. government. So as long as you trust them, as long as you have faith, then you will continue to loan them money, extend them credit, enable them to borrow and borrow and borrow and borrow. As long as you think, as long as inflation expectations are anchored, in other words, you trust them, you think they can get us through this, all right, then you don't make those different choices. You don't ask for higher wages, but that's not what's happening. You go to an auction, there's 10 people, there's 10 coins on the table, and everybody wants one. All right, wherever the auction opens up, that's what you're going to pay, and everybody's going to go away happy. But you have another table where there's one, and everybody wants it. Well, whoever bids the most gets it. But you still have 9 other people that wanted it that couldn't get it at that time. And I promise you, there is no fever like gold fever, and that fever hasn't really kicked in yet.